Lockheed Martin. And as mentioned, I think that value stocks are going to begin to work. And this stock really started to crank up when it was expected that Donald Trump was going to win the presidency. When he was leading in the polls, it just was expected that Donald Trump will be a big supporter of the military and that Lockheed Martin should have good revenues looking forward, which I don't disagree with. I think it was the right storyline. For some reason, the stock sold off substantially. So it came down to a price where I was willing to start a position of Lockheed Martin, and I started buying into the stock. It is a big company at $114 billion market cap, $71 billion of revenue. Their PE is really low. Again, value stocks are providing really low PEs. And this one has a pretty good story, which is that aerospace and defense contractors are probably going to do well under a Trump presidency. And I think, buying shares in this type of company is going to be a good idea for the next couple of years. They pay a dividend, and analysts think it's discounted by 27%. Looking at their revenues, it's a modest grower, but it's a grower, which is good. They have good margins. They have very good free cash flow. Cash flow level is very, very good. Gross margins are quite a little low, but it's a defense contractor. So they have high revenue amounts. Analysts think, how many analysts cover the stock? 11 analysts cover it. Some analysts think it's really going to go up. Even the most bearish analyst thinks it's going to go up. So overall, all analysts think it's going to go up. I also think it's going to go up, which is why I bought it. In 2025, we're expecting revenue to grow as well as profits to expand. So that's a very good sign. For the next 3 years, revenues are going to grow, profits are going to expand. Looking at my valuation compared to the current stock price, I think it's discounted by 27%. So I'm agreeing with those analysts. And most of my value comes from free cash flows, and the free cash flows just look excellent. I'm growing them modestly by 5%, which is reasonable. And when I look at earnings per share, I agree with the analyst. So overall, 27% discount on one of the most trusted names in aerospace and defense that has a very good environment going forward, with a president that is really supportive of the defense, a market that's really expensive when it comes to technology and other sectors that have grown really fast, but has left value stocks behind. So I'm willing to pick up great companies like Lockheed at a really good price. I will take it, put it in my portfolio. Hopefully it'll go up in value and reward me over the long haul. So that's Lockheed Martin. I'm glad I bought shares today, and we'll be buying more shares. I'm going to dollar cost average into Lockheed Martin and probably build up a position of $10,000, but I could easily move it up to $50,000 because Lockheed is a really, really good name. I've known of them for a long time. I invested in them a couple years back, did well, but got out of it, and now I'm back. So that's Lockheed Martin.